What's going on, guys? Welcome on into today's stream. We're going to be unpacking the absolute destruction that we saw in the market yesterday, and then talking about what the hell do we do next? What do we watch for? What are we looking for? What catalysts are coming? One of those catalysts is going to be this guy right in front of us. This is now looking. I think I refreshed it like 20 minutes ago, so it should be up to date. But I'll refresh it one more time. This guy right here is a look at the current projections for next week on Wednesday. So 1 week from today, literally 6 days, 23 hours. So a week from now, we'll be talking about what the hell the Fed just did. And they're looking at the 75 basis point hike. It is where the consensus view is right now, 72% chance of that. But instead of a 50 basis point hike being where the conversation lies, we're looking at the 100 basis point hike as the potential, outlier. So we'll see. There's a slight chance of that as of right now, and we'll see if that does move to finish off this week and to start next week in a notable way. And what may be a good key or a place to look is the 10-year. Look at bonds and see if they do give back some of yields, give back some of the recent moves to the upside that they've had over the past couple of days after the CPI. So that's that. We will dive into that. Flippa's in the house. What is going on? Hopefully you unpacked whatever the hell just happened yesterday, man. I mean, I have to say, we'll look at some of the price action. I can't say I've ever seen a day like that. But it's good. It's a good learning experience because now you have that in the back of your head, and it's not something that you're probably going to see very many times throughout your careers, but it's something that, is pretty nuts. And what I mean by that, and I'll go to SPY right now and we'll look at it. So by the way, here's a little potential, inverse head and shoulders. Here's the lows we're holding. Essentially, if we start breaking down below like 392, look out, probably going to break down a good bit and test 390 on SPY. That's what I'm looking at right now. We'll talk about that in a second, but I want to zoom in to yesterday. I mean, this is just something that I have to say, I can't remember seeing something like this year at a minimum. We have not seen this. Maybe we have, I guess, if someone wants to pull up some examples. I don't know. I can't remember something like this where we had a massive move, but it makes sense. It makes a lot of sense. Let's unpack why. We had a massive move down off the initial CPI in pre-market. So the bulk of the move was made, or a very good chunk of the move was made during pre-market. Then we open the day up, chop around for the first few minutes. That's kind of expected, first 10, 20 minutes, whatever, right? Then we start heading down, okay? Head down. And then as we head down, I was thinking this could be a good dip to buy, and it ended up being not obviously a good dip to buy. There was a bounce from there, if you were just looking at from, if you just bought SPY or, whatever stock you're buying, there was a bounce. There was an opportunity for a bounce, nothing huge, but there was a bounce. The problem is that in the options world, not only did it take 2 hours, or do we have an hour plus of consolidation right here, but this is pointed out in the comments section of this video, but also on top of that, it makes a lot of sense, right? And we've seen this before. What happened on this chart, on the TradingView chart, from 1450 to about, let's just say 17, from a little over 2 hours, okay? If you go to the VIX, here's what gets interesting, okay? You go to the VIX, what are you going to see? Well, the VIX wasn't crashing, but the VIX steadily declined while we consolidated and actually kind of dripped a little bit lower, but pretty much consolidated for about 2 hours, right, on the market. The VIX goes from over 26 to almost touching 25. So the VIX drops $1. It's a pretty big move in the VIX, to at least intraday, nothing crazy, but, down to 3, almost 4% move in the VIX is pretty big. So another factor in these options that you're looking at is volatility. And so when the VIX is pushing up, that helps with the premiums, right? But when the VIX is falling off and there's less volatility, that's going to hurt the premiums. It's going to make the price of the option drop even more. So you had volatility pulling down, volatility decay, and you had time decay. So that's now that I unpacked it, take a step back. That is realistically why yesterday was on that small count play was such a bad day, even though the trade was a very valid trade and based on the charts, didn't look like a terrible idea. But then on top of that, I want to unpack this too. The steady selling pressure that we saw in the afternoon. I mean, this is what when I say I haven't seen something like this is what I mean. first off, having a 2-hour span of essentially no volatility after a massive move down is not something we've seen this year. We've seen a lot of, jagged moves, ups and downs. Oh my gosh, no. Catching people, FOMO. Oh, is this the bottom? Is the bottom in today? People start buying the dip. Next thing you know, it starts crashing back down. Oh my gosh, I bought the dip and it's not the dip. It's keeps dipping. And you kind of get these, massive swings back and forth. We didn't have any of that. It was a very controlled consolidation. And then to finish off the day, it was an extremely controlled, 2-hour sell-off. So from right here, this peak of that little slight bounce to about just before, 30 minutes before the close. I mean, you had this, look at these candles. I mean, there is just, these are almost all the exact same size and the same length and just it's like an algorithmic sell-off. It's like steady sell. That's not humans selling this, right? Is essentially what that looks like. That does not look like humans, because humans, right? If you're at the desk, emotions take hold, right? When the algorithms are playing the game, there's no emotions in an algorithm. They just do what they're supposed to do, right? What they're programmed to do. So that's what that kind of looked like to me, in the afternoon. And then the last bit of the day, last 30 minutes, you kind of had people panic selling on top of that, which extended that extension to the downside, and then a little bit of a bounce, tiny bounce into the close. But that was essentially what happened. So it was a day that honestly I can't say I've seen something like this in terms of price action this year. I can't remember something like this, honestly, for ever. Maybe I guess every day is going to have its differences, but this is the type of action that we have not seen anytime recently. Maybe back during the pandemic, but I don't even think so. I think the pandemic was was so much more volatile on the intraday moves, even on those big down days. So kind of crazy, but here we are, right? So here we are. Next day, we're flat. SPY is flat. Here's kind of the look that we're having right now. Technically, this 391.77 or 76 was today's low. That is the spot. We break below that. Probably pushing 390 as the next test on SPY. Based off that being in the area that held up last week on SPY. So outside of that, IWM looks a little bit stronger than SPY. Nah, not really. I guess it maybe not. I guess I was just looking, but same thing here. I mean, the same setup is kind of there based off of yesterday and today's action. You kind of have an inverse head and shoulders on this shorter time frame. The key is, does it actually hold that? Maybe you're picking at something that's not really there. I don't know. SPY had kind of look of the head and shoulders pattern almost this morning. So you're kind of playing with those two patterns that are setting up in between, and we're kind of just in this little range for now. Down around 392 to about 396 or so on SPY is your range. So that's the deal for now, at least as we speak. So yeah, I don't know. I'm not sure what you guys think, but that's kind of the deal. Today's choppy for sure. Natural gas skyrocketing, cold looking at target. Yeah, I got out of my cold earlier. I got out of cold for a small gain. I sold some covered calls, made a few bucks in that. I got out of that because I wanted to buy some more TMF. So I'll pull this up too. Here's the Robinhood back under 10K today, but it's been kind of volatile, I guess, with the stuff I'm holding. However, I tried to sell some covered calls here on some stocks, but doesn't look like we're going to get filled. I'm being pretty selective on that just because of the craziness this week. If anything, you want to probably sell puts, but then again, even that, if we do drop lower, do you want to get filled? You got to be careful. You got to make sure you want to get filled on certain things. Selectively is how I'm looking at that. Selectively selling options. So I sold the cold play because made a few bucks on it. Could have made a little bit more if I timed it up better, whatever. But I wanted to get into this. This is going to be what I think could be the next, or at least my highest conviction type of play. Obviously, you toss a 3x ETF on there, and I'm not a huge, it can't be a highest conviction play. However, TLT is. So TLT shares would be the higher conviction play than TMF, but me and 3x ETFs, we just, have an attraction for whatever reason. So this is the 3x bull TLT. The reason why I like this is because you can sell covered calls against it, and you have the ability for a potential 50 to 100% type move, maybe more into next year, if we do get the situation that I think could play out. And I think there's it doesn't really matter. I mean, I think that there's multiple ways that this is going to work out. Number one, we have a soft landing. The Fed eventually eases and slows down rate hikes into next year. We get a bounce back on TLT and yields come down a little bit. Or scenario two, well, there's three scenarios. That's scenario one. That's a potential scenario. There's scenario two, where what happens is we have a situation where the Fed actually over tightens right now. And it's not known yet, but maybe into next year, CPI is crashing down really, really fast. And they're like, oh shit, we are going to risk deflation, which some people are saying now as a potential risk of these high rate hikes and really in a consolidated period of time this year, which is what's been happening. You risk deflation. And in that case, the Fed's going to have to cut rates at some point, which is going to send TLT flying, right? So, which this would go up too. The other scenario, the situation where, so there's one scenario where TLT can go crazy. There's another scenario where TLT can bounce a decent bit. That's scenario one, is it bounces a decent bit into next year. Scenario two, like I just said, is it could go crazy. It could really bounce a lot and really make a nice or a substantial run. That would not be a good thing for the overall economy. However, that would be a good thing for, let's say, there's TLT. And then the other scenario is inflation is deeply entrenched and it literally never comes down. I'm not saying never, but it literally doesn't come down. And the Fed has to continuously raise rates into next year substantially. And then there's no end in sight for that for a while. And then in that case, in that scenario, which seems somewhat unlikely, but in that scenario, this is going to come down at least in the short term. But I think, especially after a pretty nasty CPI and this being at lows, you're getting down to a point where we really are really pricing in, the extent of these hikes at this point in time. And so I think that pricing in of what comes next is going to be, coming around the corner into the end of the year and then into next year. That's why I like it so much. So there's two positive scenarios, one negative, and that one negative even would only be, I think, a shorter term negative. It will not be a prolonged negative. With a 3x ETF, yeah, you risk the decay there as well. But, there's the risk. Without the risk, what's the reward? So this is something that I do like a lot for that purpose. Not something that, I'm recommending people, do, but it's my reasoning, my thought process behind it. So I grabbed an additional 50 of that today to get myself up to about 150 shares. I want to probably get 200 shares if we do pull back from here. If we don't pull back, I'm just going to leave what I have. And that's it. So that is the thought process on TMF. It's essentially TLT's 3X bullish ETF. So there we go. I've had days like that before, hours, nothing dying. Yeah. So what I decided to do, I posted the video today too. I posted a little update video on the small account challenge. We tossed some money in. So I just said, you know what, let's give it a shot. Let's give this a shot with, another run. So I tossed $250 back in, or not, well, I guess tossed $250 in to the account. And so now we got 300. So we're going to play it from 300 and see what we can do from $300. Because I figured that, I was looking at the option chain and I was looking to myself, okay, like if I was look at IWM, I like IWM. I like watching SPY on one screen. I like watching my IWM. They're not going to always trade in tandem, but they're going to have some similarities. And then I like playing IWM, off of that. It's just something that I found to work pretty well. It's still my number one stock in this challenge. It's still, pretty positive compared to a lot of choppiness elsewhere. So I do have a decent feel for it, I think. But I go to the option chain and I say, okay, today's the 14th. Let me go out 2 days, right? Let me make sure that I have at least, an additional day before I'm not going to trade any same days. Ideally, I don't really want to trade too many next days. I want to trade at least 2 days until the expiration date, right, on these contracts. And that's a good rule I would think of thumb to have to minimize some of that volatility, knowing that, hey, it's still going to be a day trade no matter what, right, on this. So even if I hold it for a couple hours, you're going to have a little bit less of that time decay and a little bit of you depending upon volatility decay. You could have some of that too, depending upon the VIX and all that stuff. But that's something to think about going forward, and why maybe it's not the best thing in the world to trade or to look at certain, short-term day trades when the VIX is spiking, because the downside risk of the VIX pulling back could hurt your options, right? So make sure that's something to think about going forward in terms of when you're playing, on very volatile days, right? But I go to September 16th, so 2 days out, and I look at the contracts that are at the money. And I said to myself, okay, let's say I wanted to play at the money contracts, at least 2 days out. How much money do I need to have in the account to be able to play those without having, to be able to play those contracts, being able to buy 1 or 2 contracts? I'll probably just trade 1 contract to start. And then, of course, if we can grow it, we'll try to trade 2 contracts and we'll see how it goes. But if I was looking at calls or puts right now, let's say I was looking at the 183 calls, IWM is right around 182.43. They're going to cost me $1.60, right? So it's going to cost me $160. If I want to play the 182 calls, they're going to cost me $2.20. So from like $1.50 to $3 is where that range is going to be. of how much these options are going to cost, they're going to be a little less volatile. They're going to be at the money, right? So there's going to be a little bit less of that decay, those decay factors. So what this should do, in theory, this should limit or at least lower the big red days, and it should increase the size of the green days because we're doing with a little bit less decay. We're not playing super far out of them. We're not playing $3, $4, $5 out of the money contracts, even though some of these contracts weren't that far out the money. But still, when you're playing a 50-cent contract, I want to play contracts over $1, right? Ideally, this is going to be kind of the thing. Playing contracts over $1, and that's the rule, right? So that's what I'm deciding to do. We're going to play it from 300, and also it's still the same situation, the same idea applies, right? If you're starting a brand new account, I don't think even up to like even $500 is still reasonable, right? I don't think that $300 is an unrealistic number to start a small account challenge or to start for someone to start an account. So I want to document essentially going from, if you were to try to go from nothing, low, very low small account to, bringing that up to a couple thousand or more, right? That's the whole purpose of the challenge and what we can learn from that. We've been learning a ton as it is. What we've found is that it's extremely difficult and you have to have an extremely high win rate on your trades if you're going to play with an account size of like, $100 or less. $150 or less. It's just, the risk reward on your options just doesn't seem to be the best, right? Obviously. So we're going to play with $300. Might give it a couple days for that money to settle in the account, but once it's settled, we'll be good to go probably next week. And we'll be good to go from there. And the idea and the intention is going to be to, keep, even if I kept this win rate the same, right? The goal is that if this win rate is what it is, I don't really care. We should, if we can get our average winners and losers, in line or back close to the same, which I think we can do playing these contracts. And then if I think we can play deeper in the money contracts over time, I think I can really minimize those losers. Because the stock, at least the risk reward based on the stock, the price action of the stock, I know I always tend to have a 2-to-1, right? At least 2-to-1. So I'm going to risk $1, let's just say, of the stock dropping for a $2 gain on the stock. Or risk, 25 cents for 50-cent gain, right? And then the options play inside of that. But the options risk reward profile hasn't been the same because of many of the things that we're talking about: time decay, volatility decay, playing out of the money contracts, playing same day expirations, all that stuff. So we're going to avoid that by doing this. So that's the plan into next week. So stay tuned for that. It should be fun. There should be a lot. Again, we're going to keep running that in the background no matter what. It'll be part of the channel. The playlist will keep going. I'm not going to stop. So hopefully we get some more good stuff out of it. So that's that. TLT Leap, 100 on TLT firm. Yeah, no, that could be a good spot. The only thought process here, the way you're going to get there is if the market really thinks that, let's just say, CPI is not going to come down for at least another couple months. And when I say come down, right? Technically, it did come down last month, and the month before that, it's come down 2 months in a row, technically speaking. But it needs to come down in a much more substantial way, right? For the Fed or for the market to say, okay, the Fed, is not going to need to raise maybe this much, or is not going to have to continue to raise more than what we're expecting right now. It's all about the expectations. It's all about what people are thinking about, what based off current expectations, right? Is there data right now that will adjust that in the future? Up or down, right? Based on what they're going to do. So far this week, we've had data that's come in saying, hey, they have to be more aggressive in the future and not less, right? The data that we kind of had and the way that Powell started talking back in June or back in July was essentially giving us more of the, oh, wait, they might be less aggressive in the future. There's a light at the end of the tunnel, hence why the market rebounded and hence why TLT went from 108 back up to 121 during that span. So it's all about, right? It's all about expectations. That's what it is. It's all about expectations. Market does a pretty good job of kind of wherever we are right now is kind of, that blend of expectations. And then as we get data to change the mind of those in the market, the participants, then that's where you get the moves. So that's what it's all about with the bond play and going forward. And in theory too, right? Like in theory, yes, like if if bond yields came down, TLT went up, in theory, stocks should do okay. Right? They should. But my only concern, the reason why this is I have more conviction behind this than, let's say, an individual stock, is because that there's that second scenario we talked about, that what if doesn't look very likely right now, but if the Fed, let's say, is too aggressive, or these rate hikes proved to be in, let's say, 6 to 12 months, that they were too aggressive and they were all too fast, and we go into deflation and we have a much bigger recession and we have a much bigger problem on our hands, then stocks won't do well. And how much of that gets priced in ahead of time? Sure. So there's a window here. If that scenario plays out, there is a window where stocks can do well, right? But, obviously, that could be a smaller window than what we could see with, with TOT or with bond yields coming down and let's say, TOT rising, right? So that's the thought process. That's why it's a higher conviction play on bonds versus stocks. But yes, the same idea technically, or the same idea still applies, which hence is why I'm still long stocks, is because I think we're getting closer to that end game, or to that end game of pricing this all in, right? So let's see. The TMF is not going to correlate exactly with the 10-year. It's off TLT, and then TLT is the 20-year treasury. So the 10-year yield is the 10-year yield. This is the 20-year treasury. So they're different, but I like to use the 10-year as a proxy for bonds, and I like to use TLT because of the range that we have. There's many other bond plays you can play out there. There's tons, but I like the range on TLT. And it will generally, again, same thing here. Like look back at the history of TLT. Like what the heck happened on TLT over the past couple of years? Well, TLT spiked up during the pandemic because the Fed was cutting rates, right? When we were cutting rates and when rates were so low, TLT rips, TLT spikes. And then ever since then, what have we been seeing? TLT is essentially just kind of gone off a cliff, this year, because of inflation and CPI. And so we started to see that getting priced in a little bit, not a little, a decent amount, back here in 2020, late 2020 into early 2021. But then it was like, okay, how much? And then the second wave of the pandemic comes back on, whatever. And then now it's like, okay, is there going to be easing, tightening? What's the deal? Like how much tightening, how much easing? And then once those inflation numbers really got nasty, back half of 2021 and into 2022, and we started realizing, okay, we got to raise rates more aggressively and the Fed's going to have to be more aggressive. Well, that's where TLT comes dumping down, right? So I think that we're getting to that point now where the risk reward on this is skewed to the upside versus downside. How much more pressure is inflation going to put on the Fed? I think that we're getting close to that end game, or at least the end game of the market pricing that in. Could be wrong, but we'll see. Best to buy options, IV. Yeah, no, 100%. So you gotta be careful. So buying, again, on those trades, be careful. If the VIX is high, if the VIX is elevated, and the VIX is, it is right now, right? If the VIX were to come down, so part of this game is if we did bounce on the market or just consolidate for a bit, and the VIX starts to kind of flutter off, that is going to be a negative on your options. So just be careful of that too. Let's see. Love your vids. Tattoo artists in California. Oh yeah. I got a couple things. I posted on my Instagram. You can, actually maybe on my story. So let me see if I can show you some stuff. But I got this right here. This is a Line S with some lightning kind of going through it. They're still kind of healing. It's still kind of looking like it's a little peeling right now. And then I have on my thigh, I have a mountain kind of silhouette, and then I have a palm tree in the back of my leg. So I got a couple things done there, and then I got the words day by day X, day cross day by day on my arm right here. They're all kind of peeling a little bit, but we've been taking care of washing and a lot of stuff. So that was that. I found a guy through Atomic in Austin. There's a bunch of tattoo spots, but I was looking through some spots, and I found Atomic Tattoo has like a bunch of locations. And Ty, I forget his last name. Ty, I think it's Ty H. Ty was his name. You can probably find him on the site too. Was the one who I went with. I saw his stuff on his Instagram, and I kind of went with him right there. And he was booked out for like 6 months or something like that when I originally made the appointments. But yeah, it was like, I think I booked that probably beginning very, very early this year, and then got it done early September on Labor Day. So yeah. But yeah, I think it came out pretty sick. This one was supposed to be on I wanted it on the inside of my arm, but I was like, no, I kind of wanted to. Once he kind of drew it up and we kind of put it together. We're like, this looks sicker on the outside. That's what we did, and it's a kind of a custom thing too because, it's like I kind of came at it with like it's not like a tattoo necessarily based off of like where I went to school. But Penn State's the Nittany lion is their like mascot logo, whatever you want to call it. So I kind of wanted a little bit of a piece of that, hence the lioness, even though it's not a mountain lion or a Nittany lion. But no one would know. Looking at it, no one knows that, but it has some meaning to me. And then the lightning that's kind of originally what I went to school for. I originally went to school for meteorology, the weather. That's why I wanted the lightning bolts kind of through it. And I think it came out sick, but yeah, it was a day and a half, right? It was a full day. I got all these things done. I got Big Sky on my big Sky's like kind of silhouette on my thigh. It's a place that we started going to, and it's going to be like a yearly thing. My brothers and I. So that's kind of the deal there. And then yeah, that's that. So yep. Can SPY bounce? I mean, let's look at SPY. Let us look. Can you check BTC? Yes. So you can look at BTC and ETH for a sec. Been waiting all freaking day for Micron to the low 52s. It's nice and slow. Yeah. SPY is sitting at this trend line. Again, it's not like this trend line has to hold perfectly, but if we start dropping below, today and yesterday's lows, it's a very good chance we're going to come down and test at least down towards the 390. And then if that breaks, it's a very good chance that this is going to totally unravel here. At least, sorry, let me go back to SPY. This trend line totally unravels and we're going to come down into here, Could we, do something like this? Yeah, it doesn't have to come into there, but that's kind of the spots and the targets on SPY. So let's look at Bitcoin. Bitcoin right now is dumping, right? Or at least it was. It's back under 20K. Yeah, it's funny. It went right up to 20, 23 almost, and then boop, came right back on down. ETH. Bitcoin, though, as long as it holds like around this 18, 19K, it's not bad. It's like down towards support. And then where is ETH? Oh, I got to pull up. I don't have it saved there. Let's see. Ethereum Futures. It's holding up a lot better. It's on the 50-period moving average, if that matters, if you care. I don't know how much. I don't really care or I don't really use these or worry about the averages in crypto too much, but it's got some support around 14K. So we'll see if that area holds. Rad, congrats. I mean, I think they came out really good. So, the key now is like, I'm someone who, not that I don't wear sunscreen, but I've got to be careful about that. So, staying relatively, that's why I did this at the end of the summer, because we went to Hawaii and I was like, well, I don't want to do this before Hawaii, obviously. So we got it done. And I've been keeping it pretty clean, keeping it, generally, I've been out of the sun mostly outside of like, a couple walks here and there, but yeah, keeping it, hopefully it heals up nice, and they have been healing pretty good. So my skin's just been pretty dry after obviously getting some sun this summer. So yeah, but yeah, back on that day too, it was like a full day. I got there at like 11 a.m. Didn't leave till like 6:30. So we got four things done, 4 tattoos done. So yeah, it was a day, especially because it was my first ones too. I'm not really sure what to expect, but I have to say, like, it wasn't that bad. By the end, it was pretty kind of annoying. Like, I was like, oh man, this is just kind of like, you're getting to that point of like, okay, I'm good. But I wanted to get them all done. I didn't want to have to come back a second day. So that was what we did. Yup. Micron, MU. Let's look at MU. Let's see. So we were talking about Micron. We haven't looked at this one, I feel like, in a while, but it's a chip name, right? So this is one that's going to get hit pretty hard, right? With NVIDIA and Soxel and SMH, the semiconductor ETF and all that stuff. But you're down around that area on Micron. So if you hold these lows, you're coming down to the lows that we saw back here in June. And actually, it was July. I guess it was after the earnings on Micron. But yeah, it's coming down. That risk reward starts to look pretty decent too, and potentially attractive. If you zoom this chart out, look back to 2020, we got some very nice volume support around $50. So anything in this range, $50 could end up being a really nice area of support to watch, and a lot of consolidation, a lot of volume was traded in here, and even prior to 2020 on Micron, in that $42 to $50 range. So you're getting down. You've come back down to a much more reasonable level, at least that the market believed prior to the pandemic too. So, that's a good thing. It's not a perfect downtrend, but you can kind of connect some of these lines, and it's a pretty steep one. Again, these downtrends are these uptrends. A lot of these downtrends are pretty darn steep. So it's tough to kind of get a perfect, downtrend, and these super steep uptrends and downtrends don't tend to last forever, especially the steeper they are. So that's something to watch. Again, one of those trends that I think is really nice. It's not super steep. It's a nice one. It's on Meta. It's from Meta's moves this past year, you can connect a couple of these tops. It is right now, as we speak, breaking to the downside. So unless this market catches, right, if we see further weakness in the market or even just kind of consolidation, Meta probably is going to have that pressure to the downside. But eventually, right, you're looking for this downtrend to break. So here's the down. I'll extend this out, but eventually this downtrend line, regardless of the support that was trying to hold up, this past couple of months, eventually, if you do push this downtrend line, if and when that breaks, whether it's in 2 months, 6 months, 3 weeks, I don't know, 2 weeks, a week, right? This should provide a pretty big upside move. So you want to wait till that confirmation is there, but this should provide a pretty big upside move on Meta. So I'm kind of excited about that. I don't have any position on it, but I kind of am excited about that because I think that there should be an opportunity there. And if I had some cash, it might be worth a little swing trade in the Webull portfolio at some point. Risk reward is on Micron slowly but surely setting up. Yeah, no, I mean, it's getting down. I mean, you're at a point too. If you're looking for a dollar cost average, I don't know. I'm not looking at fundamentals right now on these. I can't look at the fundamentals on everything, right? Who knows? But you're looking at risk reward on some of these names, and this is one that starts to get down there, and you start just looking. If you just without even looking at fundamentals and stuff, which you should do before you invest in any stock, you start looking at this is at least come back to some realistic levels in the way of 2019 to 2020 timeframe, right? It's not like, even again, you look at NVIDIA and you're like, okay, let's take a look at where this is at. And you broaden the charts out and you're like, well, to be honest, yes, it's in this consolidation from late 2020, but you want to go back to pre-pandemic, that's taking it down here, to like $80 is where it hit highs pre-pandemic, right? So that's the thing. Like this is like still from a big chart perspective, like way up there. Now, valuation wise, fundamentally, there probably is a reason behind that. Maybe not. If there's not, then that provides maybe that's telling you that NVIDIA is not the better deal, and maybe Micron is right now, or maybe an Intel is a better deal. Hence why I like Intel. I think Intel, from a more fundamental standpoint, I think earnings was not good, but it's just it's one earning. Let's see what happens into the next couple earnings. I think that this one has, obviously it's just going straight down off a cliff, but I still think this one has potentially, it's at a better price than like an AMD or an NVIDIA as of right now, which is why, and it was a cheaper price too, just stock price wise, which is why I tossed it into the Robinhood portfolio, which is killing me right now, I guess. If we take a look at, let's go take a look at it and see where my average is. Where's INTC? I have sold some covered calls on it, so I guess technically the average is down a bit, but yeah, it's down 20%, and I thought I bought a pretty decent spot too. I wasn't buying this thing anywhere near the highs. Obviously, I bought this thing and it's still down 20% for me, but it's still an opportunity to sell covered calls. And hey, if we get back up into the green, I think the volatility in this market will still be there. So if we turn back up into next year and we're up 20%, I wouldn't be opposed to trimming this thing off if, fundamentally I thought the market had some trouble or maybe some headwinds upcoming, who knows, we'll see. But that's the deal there. Let's look at fear and guts. This is interesting. I'm kind of surprised, although I guess the days leading up to yesterday were enough to help this. But the put call ratio has not popped up as much as I thought it would pop up after yesterday. I thought you would see a bigger move up. What we are waiting on for tomorrow, we're going to get this survey, the week ending today is the week ending, right? But we're going to get this tomorrow. So jump over to AAII.com/sentiment survey. Just look it up, AAII sentiment survey. And if you were to jump over and check this out tomorrow morning, I would say it's probably a good idea because you're going to see what the heck the sentiment's looking like. And what you want, to be honest, what you want sentiment to be like if you're bullish is you actually want it to be, very low bullish and very high bearish. That's what you kind of want, because the sentiment historically does not stay that bearish and that low in terms of bullishness that long. And historically, those are actually good buys. I did see something pop up. Let's see. I'll pull this up here. This popped up This is a little chart, or I know it's kind of like blurry, but this is from Sentiment Trader on Twitter that we found. But there was 13, or the NASDAQ 100 declined. Every member in the NASDAQ 100 declined yesterday. Yesterday, every single member declined. And it's only happened 13 times over the past 25 years. Each of these little red dots are one of those examples or one of those times. And if you kind of zoom in or look at what the data says, 1 week, 2 week, a month, etc., down the road, what happens? So historically, based off of the past 25 years, right? And it's not going back into earlier than that, but based off the past 25 years, and we've been in a pretty strong market, right, the past 25 years. So you can't necessarily say maybe that we go into something different the next 25 years, But we have seen that 6 months later, after a date where every member declined on the NASDAQ 100 in 1 day, 6 months later, well, I'll just start 3 months. 3 months later, 77% of the time we were higher, market was higher. 6 months later, 85% of the time higher. And 12 months later, every single time the market was higher, which I thought was pretty cool, or at least an interesting stat. And the average, losses, at least the max losses, 3 months out, 3.7%, 6 months out, 4.3, and 12 months, 7.7. Whereas the median upside 3 months out was 5%, 6 months was 14, and then 12 months was 21%. So again, same thing. Based off some of the data, the risk reward is definitely skewed in in the positives or in the upside's favor if this was to, let's say, happen again, or this data was to work out. So that's just something, I don't know. I just saw it, thought it was worthwhile noting when you get some of these crazy days in the market. It's kind of cool to see some data. And then you go around and you can find, tons of data too of right now, this current, trajectory of the S&P, and you compare it to 2008 and it looks very, very similar. They're like tracking almost like, hand in hand. So, it's like you can go and find, good things and bad things, right, across the board. So some of the worst days are followed by the best. It's funny because today is not necessarily playing that way, right? I'm not surprised though. I'm really not surprised after how nasty yesterday was. Really not surprised, but we'll see. NVOS starting to look attractive. I think they did an offering, or they had an S1 yesterday filed. I think I saw. But yeah, it did come down to like 111 yesterday. I had one of those. It's still low volume. But yes, that is a decent. Obviously, the chart doesn't look good, but if you know what you're looking at, you know what you're talking about when it comes to stock. I would want to look at their earnings and stuff again, and just to see. But yeah, down here looks potentially attractive as long as these lows, right, from earlier this year end up holding. This could be a good spot. It's a tiny float, so there is not many shares available to trade, which could be attractive because if they get positive news or this or that, this could be one that could spike up a ton, right, off of news like that. So that's the attraction to, let's say, a small cap like this. But still, we're not necessarily in that super hot environment, right, for small caps just yet. It's not bad. I mean, you have HKD today. That's up, 200 or 345%. Jeez, man, look at this thing. Insanity. So that's one right there. That's going crazy. You have an ATX. You have some decent moves. It's not too bad. The thing with the top gainers in small cap land, though, is that you're kind of finding that it's a lot of the same names that have run in the past or this past year. So I don't like playing a lot of these, although they're the ones that traders are kind of working with, because guess what? When they spike up and then they start having their backside, a lot of shorts pile in, and you can make a good amount of money on the short side. But as new buyers or as buyers come back in, it could squeeze those shorts right out, and not necessarily in a terrible way for them, but it can kind of pop some volume in, get them to cover, which adds some more buying volume. Next thing you know, you're getting a pretty big run on some of these small caps. So yeah, that's kind of what's happening. Looks like SPY, as we speak, is breaking down a bit here too. Is it breaking below lows yet? It's at new low of the day on SPY. Look at that. So this is breaking down. We can get rid of this. That inverse, I guess, so those lows we're not holding. We're breaking below low of the day on SPY. So the key next spot, broaden this chart out, is going to be about 390. So we got about another $1.50 to go until that next key spot. It did dip below down to like 389 or so, 388.41 briefly on last week. But you want to see this 390 area holding up on SPY ideally in a perfect world for this to be a bounce. So that's what we're looking at there. IWM, pretty weak, but it's had a little more range today, I think. Yeah, it's breaking down below this too, but it's had it's not at lows of the day yet. Lows, it was weaker this morning, at least in IWM and small cap land. Tesla had a surprisingly still up over 2%. Tesla came right back up and just essentially recovered the entirety of yesterday's losses this morning. Yeah, it's got rejected right up there. So it was a good spot of resistance, right? Around 305, 306. But it's pretty impressive that it bounced back that fast. So there's a buyer in that tape for sure on Tesla, whether you like it or not. It's up towards these highs though. So just be cautious on that. But if this gets going, we can be up to 330 in no time on Tesla if this market, supports it a little bit. So we shall see. HKD is back to business. Yeah. No, I mean, that was a crazy run that it had, a while back. Here's a look at the 10-year. I'm going to go to like a 3-month chart on this. So again, the trend line is still valid, still holding up. It's pulled back a little bit off of the highs. Didn't quite hit the highs of June, on the 10-year, but got pretty close. Pulled back a bit off those highs, but so far it's catching right now. When I say it's catching, a dip buyer, or it's bouncing a bit off of the lows of today, which has been kind of the same story. So we have yet to have a crackdown on the 10-year, by any means. And I think that that's partially because we're still kind of concerned about this pricing in of this next rate hike. And I think it's potentially possible that, maybe what Powell says on Wednesday of next week has an effect on things. But then again, based on yesterday's, destruction by, and SPY in the market, I don't know what Powell can say to drop us. I really, to drop us substantially. I don't know how much, how much more damage he can do, realistically. At this point in time, it's very well known what is going on, and it doesn't matter what Powell says, and it doesn't really matter until the data that they're playing, that they have been very transparent, right? Unless they come out and start saying that we're seeing weakness here, right? And that may concern them to slow down the rate hikes, which I don't think they're going to say that. But if they said that and it was not related to CPI, that could be, the market could look at that and run with it. I don't know. But for the most part, you're just going to be, it's CPI, it's inflation data, it's the signals there and all that stuff. But what's unfortunate, which for those of us who have been watching the CPIs and stuff, what's unfortunate, I don't know how you guys feel or what you're noticing in your own day-to-day life. I've seen people just from hearing word of mouth, things have cooled a bit where they live and this and that. So, and we'll see. But this data tends to be a little bit of a lag, too. But at least from my experience, which housing is a pretty big part, rents and stuff is a pretty big part of the CPI. So the housing markets have definitely contracted a bit. And here in Austin, Texas, you have definitely contracted. But the thing was that Austin was such a hot market for so long, or at least, post-pandemic was a pretty hot market. People started moving here. People from LA, California was like insane. Now you're hearing, word of mouth, my, PT or this or that, like just from hearing word of mouth, people are leaving. There's more people who are heading there, who are heading back to, California, who are leaving, whatever. And then people who've been living here for a long time getting priced out of there, where they live and stuff. So you kind of have a little bit of that going on. And then also housing prices have come down substantially here. But we had such a big move that even though they've come down substantially, they might now line up closer to the average increase that the rest of the country saw as a whole. So now you need to start really coming down from here to start really getting in and really cutting into those numbers and those prices, bigger picture. So it's going to take that time. And then of course, on top of that, what do we see? When the housing market was going crazy, you started seeing people, okay, I got to go rent. I can't afford a house. I got to rent. I can't get a cash deal, whatever. I got to go rent. So they go rent. And then people are like, okay, this apartment going for $3,000 a month. I'll pay you $3,500 a month. And that was legitimately happening here in Austin, 8 months ago and 12 months ago, which was nuts. And now that's starting to kind of come down. You're not seeing that anymore, at least from my experience. I'm seeing, at least my building right here that we're moving out of in a couple months, is coming down. Prices are coming down. So you're starting to see those numbers come down. But the problem was that in certain areas like this, we were so far ahead of maybe the average increase that we were seeing across the country. We're so far ahead. Now we've come back. We're kind of in line with that average, and now still have a long way to go down, or still have to fall from here to really make an impact on prices, right? So it takes time. It's going to take its time. And that's the deal. And again, when housing prices are so high and when rates have been spiking up, what does that do? People got to rent. Not as many people are going to be buying a house. People are going to rent more, right? And so that's still going to put some pressure on rents, and that's going to put some pressure on that at least in the near term. And then eventually, as that starts to get digested, it can start to come off. But it takes time. And again, in terms of the Fed, they're playing off the CPI, which, as many will say, it's a lagging indicator, So the question really becomes, how much damage has been done and how much are they going to do, right, in this rate hike cycle? And then when they do kind of come off and back off, is there too much damage done, and what happens from there? Do we go into deflation, right? Or is there a bigger issue, bigger recession, like all that stuff is the question. So that's where a lot of concerns have been. I think that we're going to probably go into a period where that concern dies down. You need to get CPI starting to come down, though, again, for that to happen, right? So, it comes back to the same thing. You can go through a period of time where CPI starts coming down in a nice pace, and we're looking good. All of a sudden, you get to next year, and it's like, wait, it's still coming down like really fast. It's coming down really, really fast. Oh, wait. And then it's like, wait, now it's going down like too fast. Like that's, but it's not gonna happen tomorrow, right? And that realistically is where I think the next biggest danger. So if we're going to go to new lows, that's probably what's going to happen. That's just my take. Unless there's that, or you can stay very elevated and we're going to hit a new high in CPI. I just don't think that's going to happen, especially with oil and energy prices that have come down. If those start to ramp back up in a big way, it needs to be a big way, then there's that danger. But until that happens, that's kind of where we're at. So. SPY key, low key on support. Yeah, it's teetering on this spot. I mean, it's sitting right here. It did technically dip below yesterday's lows a bit, but it's finding a little, some buyers coming in right now a little bit, not below last week's lows. So it's just, it's right on this line. This line doesn't have to be perfect, not necessarily. We're breaking down below it. If SPY was to close above yesterday's close and it was to close green, would probably be a positive going into tomorrow. But it's kind of sitting right there, not too much of a move, really. But for those who are tuning in now, I want to mention this too. Yesterday's action was nuts because we talked about what happened, midday in terms of, the VIX coming down and the market kind of just consolidating, which is not something we've seen on these huge red days. You have a lot more of this type of action. You know what I mean? To some degree, you got a lot more of that. We had a very slow and controlled midday, and then a very, it was a pretty, intense sell-off, but a very controlled, look at how controlled these candles, this price action was. It was very algorithmic. It was a lot less human-driven, in my opinion, and it was a lot more algorithmic-driven. Now, what does that necessarily mean? I don't know, but that's kind of what it was. That explains that move there. And then as you get to the last half hour of trading, people start going, holy shit, I got to get out. This looks horrible. And then that extended that downside push into the close is kind of what was at least my, takeaways from yesterday's price action. Not something we've seen. Caught a lot of people off guard if you were trying to trade it. But that's essentially the deal on how SPY ended up shaking out. So for now, we're approaching new lows. We're gonna we just hit new lows about 10 minutes ago, 391.32. We'll see if we get a new push to new lows here to the end of the day. But on that front, what else is going on? Let's see. Look, biotechs are actually flat. They were up, then they're flat. They're falling back off a little bit. XBI, ARK is up. ARK Invest, believe it or not, is up over 1%. Amazon's up, Nvidia's down. Not surprised. Been a pretty pressured name. Tesla's up 2.5%. This is pretty notable, but it's starting to break down now. You can kind of see. Oil was up a decent amount today, I thought, and then oil was up a lot. Oil was pushing back over 90, and now it's pushing back. It's fall right back down to 88. So oil was up a decent amount. Now it's come back down. If you look at oil's kind of little trend. We were we bounced pretty decent. This is like a rough channel, but it bounced nicely off the bottom of that channel, off that extension to the downside. And And now it's getting up there. There's another couple dollars to go to the top of that channel, roughly, if it was to hold that rough channel. But that's what we've been looking at. Bitcoin's down under 20K again. Gold and silver. Silver's up. Gold is not. But bigger picture on both of these. Actually, no, gold is into that range again. Gold is into that zone. We'll see what happens. But silver's been stronger than gold for sure as of late. So yeah, silver's been a lot stronger than gold, at least the past couple of days, about a week or so. So that is the deal. I myself today did a little bit of, I cleaned up the port. So I cleaned up a couple things just on a Webull, just to kind of clear up some of the positions I had. I had like 3 different strikes for some stuff. So I cut off one of those and I kept it at 2. So now I have 2 different strikes for TLT, for Labu, and for Soxel into next year. So I kept it to 2 and then added to some of those. I have a few bucks to add cash. I got rid of the Mullen, play just because I wanted to pull the cash into some other stuff, into TLT and stuff. This is nothing against this stock, and I'm not a fan of the stock, obviously long term. However, I wanted some exposure to some of these kind of short squeeze or risk on plays, right. Of course, selling it towards the bottom of the range, is that necessarily smart? No, but I'd rather put that money into a higher conviction play like a TLT anyway. So that's what I decided to do. If I got some cash, freeze up, great, I'll add it. I mean, it's just been painful, across some of the small caps. I do have some money in small caps like PPSI again for the hurricane season, which by the way, might be picking up soon. I was looking at some, we can look at that stuff too. It's just sitting on this support that it's been on. POLA is another one too, I think as well. It's just been sitting there. So these are the types of names that either they have to, stop me out for whatever reason, or they have to hit, they have to get pumped, or they have to hit, have a news press release, or they have to get, a nice little 25+% day for me to take the gains. Is this the way I do it? And it's just been like a painful, just like nothing. So it's like, I just don't have a much of a churning, cash flow, I guess, in the portfolio as I'm just patiently just sitting on some stuff. I'm still, I think, like up on those positions, and I've locked some gains and then started by a dip, but it's like, come on, make a move, man. It's what it feels like. But again, going to that, I want to pulling up the forecast. Now this is, again, I have a pretty decent background in this. I went to school. I have a legitimate meteorology degree, like technically speaking. And I was a big, huge weather nerd throughout my younger life. Still am, but I definitely moved somewhere where there's a lot less crazy weather. It's pretty consistent for most of the time, especially from like March to like October here. It's like pretty much like 80, 90 degrees, and most of the time it's sunny, in here in Austin, Texas. And then of course you got the winters, but they're pretty short. It's not that bad. And you can still get 80-degree days in the winter here too, but it's more like 60s, 50s type of deal in January and stuff. It could get cold. We got some snow like 2 years ago, but this guy right here, if I just zoom in, this little guy right here, which is, I know it's tough to see if you don't know maps and you're not familiar, then yeah, you're not going to really know what the heck you're looking at. But it's like just north right now. It's like just north of Puerto Rico. Well, this is the time. This is into next week. This is a forecast. It's a forecast model. This is where the future of weather is. This is where I could have looked at getting a job. I took an internship at a company that would do a lot of the data analysis and programming and coding that went into like models kind of like this, just for different sectors and whatever. It happened to be up in the Northeast for the power grid and whatever, but it kind of, a lot of it plays into solar and all that stuff. I just realized that I hate coding. Hence, when I went more of that, I went more of the finance route from there. After that internship, was like, whoop, no way. This sucks. Not that it sucks. I like the weather, but I just, the way that field is going, I was like, eh. But I was looking at this forecast before, and this is concerning because that's a pretty substantial hurricane that looks like it would hit, as this model shows, directly into Long Island, into just east of New York City, and just right up into the Northeast, which would be nasty. Like that would be horrible. Like that would be a really bad storm. Obviously, this projection is out to September 25th, so it's out like 2 weeks. Is that more than 2 weeks? It's like more than 2 weeks, right? No, is it? I don't know. Whatever, maybe a week and a half. A lot can change, and these tracks change. But the key to note is that we have something here, which is going to potentially, lead us to that PPSI type of trade or whatever. Where the exact track is, who the hell knows? Could it completely miss out to sea? Yes. But something's there, right? And we've had a very quiet hurricane season. Very, very quiet. So keep an eye on that and what that could mean for some of these, hurricane-related plays and whatever generator-related plays, power-related plays, But that's pretty nasty stuff. And what it does also show, believe it or not, because you get such a strong storm, this is kind of like, give me like another second of being a weather nerd. You get a massive storm ripping into the Northeast, which is, first off, very rare, but like a Hurricane Sandy-esque type of storm, or Irene, if you were to go back, however many years that was now. I lived in Connecticut, so I lived through both of those. Insane. Power was out. I was in like high school, I think. Power was out of school for like a week, 2 weeks, 3, I don't know what it was. Craziness. But it then brings in, because the storm is so strong, it's going to throw off a ton of things. It freaking snows. You can't necessarily see it, but it's going to be snowing in the Northeast like a week after or a couple days after that storm in September. That's how powerful that thing is going to be as it pushes up, to the north, which is pretty nuts. So maybe some active weather across hurricanes, across the hurricane season of the Atlantic coming up. So I wouldn't jump ship off some of those hurricane plays. At least I'm not jumping ship on them yet. So that's that. Algos piling in. I think it was a lot of the algos trading yesterday. I think a lot of that had to just do with it was just algos in sell mode. They were like, all right, put them in sell mode and just, chop us. And it just traded us down to the end of the day. A lot less human, trading, I think, towards the end of yesterday. But, it is what it is. So, decided to get a micron call. Let's see how this goes. I mean, it depends on how far out you have, how far out you're thinking. But I think that, let's look at the MU again. How much is it down today? It's down 2%. Just pulled into new lows there, and now it's bouncing a little bit. If you're thinking, it depends on this time frame, but if we get kind of a double bottom setting up right here around 52, that area holds, could have a nice little bounce. The question is really like, we're not sitting here trying to time a bounce. Who the hell friggin' knows, but all we do know is if you go back to SPY and look at SPY's chart, if we hold 390, it's notable because it's a higher low. A little bit less kind of wonkiness and volatility, it seems like, intraday. Let me pull up the volume on this chart just to kind of get a feel for how the volume looks now. Yeah, I guess the volume is elevated as we speak now. You went through a period of time where it was pretty low back here in June, pretty low back here in August, and that pushed to the upside. But it's picking back up a little bit so far to start September, really, generally speaking. October. Okay, so you got about a month, a little over a month. It's not bad. If you bounce off these lows, it's a good risk reward. Now, if SPY decides to say, screw your calls and just and do something like that, and yeah, obviously that's not gonna be good. But you're down towards those lows, so the risk reward is pretty decent if you were to get a bounce, and that's all you can kind of play, at this point in time. All you can play is, hey, what do you see, and how does your risk reward line up? And if you manage that trade, if you manage that position, and you're going to target on something like that, right? If you're going to target, let's see where we're at least like this trend or the 50 SMA, I think it's a good target. That's up here towards $60, And let's say you do risk the let me get rid of this volume so you can see it better. Let's say you do risk the lows of the year, the 52-week low at 51.50, roughly. It's 51.40. Let's say you risk it down there. You're risking about $1.25, for, what is that? like, $7 gain, $7.50 gain. It's a really good risk reward if that's the play. But if let's say, it dips below, you stay in and SPY starts to dump, you can get yourself caught up into more and more trouble, right? But it depends on how you want to play out that trade at the end of the day. So not a terrible idea by any means, and could be pretty juicy. That's why I like Upstart. I have an Upstart call. I didn't want to dump this just to free up cash. I like this play. I like Upstart a lot. I have Upstart I gotta zoom this chart in because it's like so freaking, destroyed from the highs, like just absolutely destroyed. But if you look at this chart, we haven't gone to new lows yet. New lows would be down below 22.42. So we haven't been there. The past 52-week range is up to 401, which is insanity. The range or the downside that Upstart saw, absolutely nuts. But then again, when you got guys on CNBC who get asked about what the company does and they don't even know how to answer it, that perfectly kind of explains, like the hype behind it. Like no one knew what the hell the stock was. It was just going up, so they bought more. And they kept trading it and they kept, holding it, right? But Upstart for me is if these lows can hold nicely, which I think they can into the end of the year, this could have a really nice move to the upside. Could have a nice squeeze out, whatever, just relief rally. I'm targeting up to $70. That's a big target. I understand from where we are right now, but that's a nice gap on the chart. So I think we can get there, and the 200 moving average is up here towards 80. I think that's not as unrealistic as some may think for a relief rally. Now, the market has to cooperate, but we shall see. As long as these lows hold, we'll see. That's the plan, risking the lows. Okay, that's good. So I think I like the plan. I can get on board with that plan. It is a solid plan. So let's see. What we got? It's 2:38 my time, so 3:38 Eastern time. So we got 20 plus minutes into the close. 10-year hasn't really moved since we got on the stream. Not really. It's just back to auto. Yeah, it's just kind of sitting there. Had this tried to kind of get, this little consolidation here. It's kind of your range. And it's starting to kind of try to break down this morning, kind of reclaimed it. Now it's just sitting there. We'll see what it wants to do. Into the end, or at least into the end of the week. I think that this is all about pricing in and what the hell the Fed's going to do. And it seems like we're still on that 75 basis point train. Yeah, now it's 76% chance of that. So it looks pretty likely that that's where it's going to be. I do think, again, I really think that if the Fed was to do a 100 basis point hike, we're going to sit here and say it's hindsight, next year and whatever. We have no idea. Just like we said they should have started raising rates earlier, right? Slowly. They could have started raising, late last year, early this year, a lot nice and easy, couple 25s, get us going. And then, some 50s maybe popped through. Maybe there wouldn't have been a need for a 75 to be that aggressive, to be kind of a little bit easier into this move. I don't know. So we shall see, but this is going to be kind of your key to watch into next week. So their meeting is on the 21st. We'll do a stream for that like we always do. We'll have Powell live. We'll see what he has to say. Not expecting anything crazy, revolutionary from that or crazy new, but we'll see if there's anything that is said in there market likes or doesn't like, coming into next week. And we'll see what happens too. But a part of me has this feel somewhat similar to last time or back in July, where we got this CPI in June, right? I'll kind of circle it on the chart. We got this CPI. Well, here's this consolidation back in June, right? CPI comes in. We absolutely dump off a cliff, right? Down into here and then bounce, make a new low and bounce. Now, we obviously didn't make a new low. We'll see what happens. Maybe there's more downside to come to finish off this week and next week. We shall see if we can't hold this 390 on SPY. Then, yeah, there's probably a decent shot or coming down to 380 or so or just below 380. We'll see. And then we kind of had a little bit of a chop. The next Fed meeting wasn't until July. And I believe it happened mid-July. I forget exactly the date. Mid-July, but somewhere in here. Okay. And the market just kind of took it and ran with it right from then. So, and that was where they saw Powell potentially, give some hints. He's not going to make that same mistake. I can almost guarantee that in terms of hinting at a pause or a pivot or any of that stuff, or a slowdown. He's not going to do that because he knows whatever he said, I'm sure they've reviewed this, whatever he said in July, he will not say again because he doesn't want the market to start running with what he's saying. Because again, a market pushing up is going to be, problematic for their inflation battle. Next year, different story. If they can get that number, that CPI down, but right now they don't want that, right? So they don't want the market necessarily to go. They don't want the market to just plummet, probably, but they don't want this thing to go up too much, right? Was what they ideally, in a perfect world, what they want for them, right? So I think that we can have a situation like that where you have a pretty nasty move to the downside, and leading up into that. Now we'll see what happens, to finish off this week and next week. A pretty nasty move leading up to CPI. And then you kind of get to CPI, or not CPI, to Powell's speech. You kind of get to Powell's speech, or you get to the next Fed hike, and it comes in with that 75 like we thought they were going to do anyway. And it's like, okay, now what? And there's the threat of the 100 is gone. And it's like, all right, so now what? And the market goes, okay, market could run with that a bit. if it's holding these lows, right? Or even if it comes down, right, to that next area of support, it could run with that a bit. We'll see. But it has that same kind of feeling, where the CPI is what freaked everybody out. And then the Fed meeting, again, isn't really the biggest deal here. Because of the CPI, we know what the Fed's going to have to do. The market prices in where it thinks they're going to raise, and they pretty much raise. This has been a pretty good indicator. So if this is above 80% come next Wednesday, of that 75 basis point hike, I don't think that they're going to shock us. They could, but I just don't think they're going to shock us. And if they don't shock us, maybe I don't know if we dump off of that day. I don't know what can be said there that we don't already know or we can't already anticipate, unless there is something notable that is said, but I don't see that coming, at least for now. We'll see. Then we had a 75, shouldn't be that bad. Yeah, I think the 100 will sell off. Now, again, some of that was, started to get a little bit priced in, I guess, yesterday and today because of now there's a chance. So there's a chance there, but we probably will sell off if it officially happens, because it is still not the highest probability of a chance. But I'm guessing that we'll probably sell off, on the day if it does happen. Unless we were to sell off substantially from here leading up into it, which would potentially price it in. So I don't know. But that is that. Going into tomorrow, let's pull up SPY and see what we're going to get. If we get this next 15 minutes, if we do close green today on SPY, that would be a pretty good sign, I would think. At least for the bulls, I would think. So we're only down 0.6%. We were down about 0.4% at the worst. Now we're down only 0.6, 0.5. So we'll see what we end up closing at next 15 minutes or so. And I've had some people, and this is something I've been thinking about this a lot more recently. But I also had some talk about, like, an ask. People are like, we should do a Discord and stuff. As I've said in the past on that whole thing, I absolutely hate the current day and age of the social media, Patreon, Discord, pay me to join my group and then get my calls. No, I hate that with a passion. So, but because I've got my brother who's been helping out, or who has now a little bit of extra time on his hands going to community college, he has some time, and he was like, we've been talking about this, and we've been thinking about maybe, and he has some more experience in Discord, more than I do, to be honest, about maybe doing something, and it would be 100% free, 100% free, but maybe setting something up so we can have kind of an after hours, more so instead of just live chat, so you can have more of that action. Just kind of talking, going back and forth. It wouldn't be anything like, some of these crazy ones people pay for and stuff. My concern was that there used to be so many. Now there's probably less now, but there were so many. And then I was like, I don't really, what extra value could I bring to it? So I never did it. But I've had people who've asked about it. And so I figured it might not be a bad idea to start building up, something that we can kind of talk in, or, throw ideas around, outside of market hours and whatever, and just during the day and stuff. So maybe we'll do that. It's been something I've been thinking about. It could be cool. But, my whole thought on that too was like, well, another part to that was, if I have to create that, run that, I'm not charging for it. So it's like, it's going to take some more time out of my schedule and my day. But now my brother might be able to help. We might have a different little story. So that's the deal. So something potentially coming soon. We'll see. It won't be anything crazy. It'll just, be an extra little outlet, I guess. So we'll see. Little late day buyer. So let's see what happens. But I mean, that's the thing that's funny too, is like the whole space of the whole Discord, the Patreon and this and that. It's like, oh my gosh, like, here, pay the $25 a month, or pay even just $5 a month to join. It's like, no, that this game, as I've said before, this game is hard enough to make money, let's say, outside of being a long-term investor, which you can't really go wrong with, right? Which we always talk about. That is something that you don't really worry about. It takes 5 minutes of your month, right, to just make sure the money has gone into your long-term account if you're just auto depositing, and then buying, a total stock market ETF or dollar cost averaging into a couple stocks that you like for the long term. Takes no time, right? No time. The stuff we focus on is more so that swing, that medium term, that even sometimes short term, and that's where there's potential to exceed, average returns, but there's also not many people who can do it, right, consistently. So that's where there's the opportunity that we've been really talking about more. But that whole Discord thing is just like And I hate that stuff so much. I've been there, done those. I'm in none. I literally am in no more. I mean, I'm in some, I guess, free ones or whatever leftovers that I have, but I don't pay for that stuff anymore. You know, people are lose enough money in the market, and that's my whole philosophy too behind that. And even myself, I would much rather lose money in the market with my own plays than pay somebody to tell me to buy this and then lose on their play. You know what I mean? And maybe they are successful, but they're going to still have different styles. They're going to take profits at different times and all that different stuff. So again, like the whole reason why I don't like that, why it doesn't necessarily work long-term is because at the end of the day, you have to do it yourself, you know? And if you're not able to learn from those things, it's like, what's the point? So I know what you mean with the Patreon, Discord scammers. I mean, some of them aren't meant, they don't intend to be scammers. Like there are people who are good out there, but still it's like, you know, I just don't want people to pay for that. Like, you know, like it's hard enough. It's hard enough to do it yourself. It's hard enough to make money anyway. Right. So to be cool to chat around with. Yeah. I think that would be the whole point of it. And I think it would also be a good thing. I would organize some stuff and some resources for people who are new. So it has different like resources and, you know, maybe like, you know, put a video or two and, you know, and just, you know, so it could be like, okay, like if you want to learn how to get started with, you know, blah, blah, blah options, like watch this video on what the hell are options, like figure it out. And then so you can kind of for free have everything kind of lined up and walk through in an organized manner, but for free, you know. But again, it would take time for me to kind of set it up and manage it. So that's the whole point of why, or that's kind of partially why I never got around to it. But maybe in the future, coming soon, we shall see. But okay, that said, so yeah, we are getting some late day buyers on SPY. But you see what I mean though about yesterday versus today? Like you see, like if you just zoom in on this chart, like look at today's price action, right? You know, a lot more wonkiness, right, in today's price action. That could be good or bad. You know, could kind of suck, could be kind of good, right? Depending upon what you know, how you were playing it, if you were playing it. But look at yesterday. Like this just is too clean. This move down yesterday afternoon is too organized. It's too perfect. It just looks so nice, right? Those candles were like almost all the same way, like the whole way down. They're all right in line. They're all making the same type of move. So that was what was like. That's got to be a lot of algorithms, you know, of doing the selling there or doing that move to the downside. So we're approaching VWAP on SPY right now, trying to get there. We are technically green, but we'll see if we can get up into the next 10 minutes. But SoFi is up 5% today. Interesting. Let's jump over and check it out. Let's check out what's going on over here in SoFi and the Robinhood. So in the Robinhood portfolio today, Shopify is having almost 3% day. Fisker having a nice day. Guess what Tesla doing? Fisker's doing decent. SoFi is having a 5%er. So we're doing it. I guess the Robinhood portfolio is up about 1% today, which is not too shouty. Not too bad. What's the bad one? Intel is, of course, getting destroyed. Snap is getting hit, but Snap is funny because I have an average like $9 on Snap. So that's, you know, still up massive on that from where I bought, which is kind of crazy and kind of, I guess, somewhat lucky, but also like I, you know, just figured that opportunity there is nice. Snap, if we get to $20 into next year, whenever, it could happen sooner. I don't know. If Snap gets $20, I'm out. Just know that I'm definitely out of that thing. Nothing against Snap at that point, but hey, I would have rode Snap from $9 to $20 in like, you know, less than a year. I'm more than happy to take 100% on that. And I've sold some covered calls against my position, so it's been nice. Let's see if we can look at. I haven't sold too many covered calls. We got 10 minutes here. Let's see if anything looks appealing. Shopify. Let's see. It's just under 34. If I go out to this week, is there anything that even is remotely realistic on Shopify this week? To sell a covered call around like maybe 36? Yeah, you could. There's $15 on the table, maybe 36, 37, maybe 37. Let's look at 37. Let me look at Shopify's chart and see. I mean, like, the risk that I have is that what if we all of a sudden ripped face, you know, Thursday, Friday and squeezed out a lot of people who went short this week? Is my only concern of you know, capping myself because Shopify popped up to about 35. Yeah, no, this could be good. 37.50 would be a pretty big move up. Let's see if we can get around that area. 37 is 7 cents. I'm gonna do it. I'm just gonna take $5 here off on the table. If it's they're gonna give it to me I'll take this. I'll take this at the 37.50 strike. I'll sell that to make $5 and just cash flow $5 this week. If needed, I can always roll it into the next week. And what you could do, especially if we do start turning to the upside, is you can start rolling these contracts week by week by week, as you need to, if you need to. But I put them so far ahead anyway. I try to make them very, very far out of the money. So if we were to get there, Shopify should not be much higher than that price, by the end of the week. But we shall see. A lot could change. A lot could change in just 2 days, as we've seen a lot can happen in one day. So that's $5 we can take a little cash from there. SoFi, let's see if SoFi, SoFi is too cheap a stock for me to probably get much here. But I'm thinking maybe the 650s. No, not worth it. 2 cents, not worth it. SoFi probably needs to get back to like 10 or closer to $10 for me to be interested, or really for these covered calls to make sense. I think I have an average. I sold a $6 put on SoFi like a week or two ago, or maybe 3 weeks ago. I forget now how long ago. Yes, I'm up on that position right now. I'm up, 18%, whatever it is, or no, 3%, sorry, on SoFi. So it was nice. I figured that was a good spot to start snagging some, after the student loan decision was made and stuff, and that was kind of behind us. Now we have more clarity there. I felt more comfortable with SoFi. But outside of that, not too much. I sold a Soxel. I sold a shop. I have an FSR and a Labu that I tried to sell, but if they don't fill by the end of the day, and then that's it. Upstart has been a fun one. The option chain here is juiced up. I think I sold a 28 call last week, something like that. Let's see if there's anything that could be worthwhile here. Sell a call Upstart for this week. It's only 2 days away, so this is kind of, cutting it close. The option chain here is nice, man. Yeah, you can sell a 28.50 I'm going to sell a 29 for 4 cents just to make 4 cents on this week, just a cash flow, but again, you start stacking these up and it's like $5 here, $10 here. And in a perfect world, you would want to do this, on a Monday, on a green day. If we got a green day on a Monday, that's like the best. That is like, I guess in theory that we did technically have that this week. So what you would have wanted to do this week was on Monday, when a lot of stocks were really green, looking good, you could have sold a ton of covered calls. I just didn't want to do that just because of CPI is that binary event. Like if CPI came in lower, we would have ripped face potentially, and then I would have been, getting taken out. So why would I do that? So I waited to CPI, and now if we get going from here, maybe Monday of next week, if we have a green day, let's just say, you can go out. The option chain will be juiced up a little bit. Those calls will have a little more, juice behind them. They'll be a little more pricey. And you can go out and sell something, farther out of the money that would still pay you a few bucks, and cash flow a few bucks from that. I like to go way out. So Upstart, as we saw, can pop, like $3-4 in a day, as it did last week. So just in case, I sell something that's $4 out of the money, and if I have to roll it, I can roll it, by the end of the week into next week, potentially, and that's it. But just keeping it, pretty cautious. This week wasn't really trying to do too much, or try to do too much, I guess, for now. But that's that. But Upstart's a good one. Upstart is a really good one to sell covered calls. TMF will be good, I think. The thing with TMF is that this is you can sell if you got a TMF options. This is the TLT 3X. They only have monthlies though, so you got to be careful, right, in terms of what you're doing and understand like what you're looking at. But it's been in such a a downtrend, it needs to get some positive flow. But if you have a week or two, or let's just say the 10-year or yields start cracking down, right? And that trend line on the 10-year yield, let's go back to that and check it out. This trend line right here on the 10-year yield breaks down, right? If that happens and we start seeing TLT pushing up and bonds start pushing up and yields are coming down, that will kind of give us a little bit of juice, and there will be a little bit of life in the TMF option chain. There's not much right now, but there could be a little bit more life. And so looking at like maybe the 13, 14, the 15s out to October, they might be worth 5-10 cents, and you can go get a couple bucks off of something like that. You could technically sell the 12s and say, hey, I have an average at $10. I think I actually have an average just below 10. I have an average for just below 10. I can go sell the 12s and say, hey, for $15, I can take a covered call off there, get paid $15, have that set out. It's a 3X ETF. It's a little too volatile for me to take that, so I'm not probably going to do that. But knowing that I could take that right now and get paid $15 for essentially looking to lock in, over 20% gains in a month, it's pretty darn good, So the option chain just needs a little bit more life. We need a couple green days in a row, a little reversal coming on TMF, and then we can get something going on this. So I think that there could be some value here, but I'm being patient on that. I have a much bigger time horizon here. So this is the type of stock that I would not be touching, anything, that's too close. Like 11s, no. 12s, no. I'm looking at probably it's got to be 13, 14, 15s is what I'm looking at for about a month out. I wouldn't want to, just because of the nature of a 3x ETF and a lot can happen in a month, and that I have a 6-month time horizon on this stock or this trade idea. I just don't want to give it away too early, right? If I am right, I just don't want to give it away too early. That is the idea and the thought process behind that. So we shall see. But yeah, I made a cash flow a few bucks, and again, only when the stuff's green. You could do it when it's red, but the better risk reward on selling covered calls is when it's green. So look at that little rip, SPY above VWAP. So pretty strong close, not up to high of the day, but it's closing green. So there's that, and we talked about that. That would be a pretty good look. And it seems like it is a little something going on here, right, on SPY. Hatred towards Snap buying at $50. Yeah, that'll do it to you, right? When you get burnt, pretty bad, it'll hurt you. I could say there are some stocks I can recall that are like that for me, but I feel like at this point I don't really care anymore. You know what I mean? The nature of the stock is what it is. But what I've kind of come to realize, and I kind of like playing the sector ETFs instead of just individual stocks. I still like my small cap swings. I don't know if I'll ever leave that, realistically, but for the most part, in terms of if I'm looking at macros or swing trades, if I'm looking at swing trades, it needs to be like I for the most part, I want to be more in line or in tune with the macro and trying to kind of front run the next macro shift that we see, being early in that regard on my swings, which then takes me to more like the ETFs and stuff. And then, I feel like I just enjoy that more as of late than the small caps, which are, to be honest, pretty random, unless we go into much more of a hot market or a really hot environment. And it could be, there is skill, obviously, but a lot of the time it is kind of random across some of the nature of those moves, because you could wake up to a stock that has a nice positive, phase 2 data PR, and next thing you know, it's up 100%. Now, was that skill? Was it random? Well, maybe it was skill because you identified a stock that was undervalued, had a lot of cash, had, a catalyst upcoming. So there's some skill, but how much it spikes, to be honest, is completely random. You don't know how much it's going to spike. So, okay, market is now closed, and my Fisker and Labu options calls that I tried to sell did not fill. So, hey, no big deal. But, that is what it is. So we finished up about 0.38% on SPY. Pretty wonky day. You would think, especially with how today went, we had a couple times where we broke below the lows of yesterday, and you would have thought, oh, here comes the floor breaking out below us. It's going to drop out and we're going to dump. It wasn't the case. So it's been kind of wonky, but yeah, that's been the market the past couple of weeks. And, especially after a day like yesterday, you got to be careful. So I get it. SPY charge green. Yeah, no, 100. Yeah, it did. It definitely did. IWM finished up pretty green on the day, about 0.45. QQQ finished the day almost 1% in the green. Look at that. So they had a pretty strong close. That's a good look. I mean, that's a positive for tomorrow, for the rest of the week. That's a positive. We just mentioned that before. You look at the daily chart. The daily chart on SPY, yeah, did it technically wick below our trend line? Yes. Did it do the same thing back here last week? Yes, and it held. So far, so good on holding, right, on SPY. So that's the deal. So, yes, I also did today, I forgot to mention this. I did this as well I cleaned up a little bit in the Webull, but I added some stuff to Labu and Soxel and whatever. I also added a TNA call. This is the 3X Bull ETF. You guys know me and the 3X ETFs. I love them. But it's essentially the same thing as playing IWM, just this is cheaper. So the option contracts are cheaper, so I don't have to tie up as much money in it. A TNA 50 strike call, and I bought this. me see my average here. I bought this at an average of 335. It closed the day at, the bid was 320 and the ask is 340. So like right in line pretty much. I bought this, and the risk that I'm going to risk is down to the lows of last week. So I'm IWM, right? This is a 3X bull ETF on IWM, right? If IWM goes down below, I had a line here too, this like 178. If it closes below 178, like this week or next week, then I'm out. So I'm going to risk like $100 on that type of thing. But I bought January's, and they're 50 strike for those. So I potentially envision, if this low does hold as a higher low, and we do kind of go from here, let's just say, right, in this market, which is possible, then I envision potentially riding this thing for a while. So that's that was the idea. But pretty good risk reward, especially for a January contract. It's a cheaper stock. Again, TNA is like $40. It's $39. So, when you play these 3X ETFs on SPY or on IWM, like they're fine to play. Understand that there is some decay in those ETFs, but it could be a way, the option chains, depending upon if there's enough volume, that could be a way to get access to maybe a longer dated call or put that's right around the money, or maybe it's out of the money, whatever, that could be closer to the money that you maybe couldn't have done by playing SPY or IWM or QQQ, because those stocks are a little more expensive. So that's just one way to do it. You'll see it done from time to time. So, that's what we got going on, and we'll look to swing that one. And we'll see. Either we're going to break down below lows and we're going to be out, or we're going to go from here. So we shall see. INTC is getting crushed. Yeah, no, it definitely is. And I'm telling you, I'm down like 20% on that. 19%, something like that, from where I bought, which I thought buying like wherever I bought it, like somewhere in here. I don't know where I bought it. Somewhere in here. I thought, okay, this is a pretty good spot. Nope. She went lower, but it is what it is. It is what it is. This thing has the look of, if we were to reverse market wise, you can probably see this thing snapping back to $35, quick V, and then, whatever it wants to do market wise from there. We're going to go up or we're going to go down on the market, right? But I think that you're going to get something like that at some point. You're getting super oversold on INTC. So, you're going to snap back at some point especially on the semiconductors space as well, right? We want to talk about a sector that's probably I haven't looked at data. I haven't tried to, peek it out, but a space that's probably getting shorted pretty hard. It's probably a go-to on the short side for a lot of, big money. It's been weak, and it makes sense. On red days, it gets hit pretty hard and, makes sense. But it could obviously come back pretty strong if we do turn up on the market. So we'll see. We shall see. I like all the ticker names for the 3X ETFs. Yeah, they're kind of funny, some of them. They really are. But yeah, the 3X ETFs have been fun to play. But again, I do like them because, you're going to get more sector exposure. You're going to get more, obviously you have leverage, but you're going to get more sector exposure. The leverage factor doesn't really matter, at the end of the day. Like, you could play a SPY options and it's like the same thing. It's not like it's adding too much of a different, animal to the game. There's a little decay in there, so you got to be careful of that. But I do like playing them, especially when you're looking at sectors and looking at the macro. If you're thinking about the macro, right, in terms of the economy and whatever you think is going to happen in the next 6 to 12 months, the 3X ETFs could be a good way to help play the macro for different sectors or this or that you're looking at, and that you might have a conviction behind a trade. So with that said, let's look at FinViz and we'll wrap things on up. We are looking at a day where we're back to 32 or 33% of stocks. Hopefully the sirens aren't too loud. That are above the 50S, and that's come down a lot. That was over 50, I think, to finish off or to start this week. So that's come down a lot. But today was kind of a half and half. Even though it was a green day across the board, we still had more stocks down than up, believe it or not. 49% of stocks were declining, whereas 46 were advancing today, believe it or not. Microsoft was down. Tesla was a really green, bright spot. Energy was a pretty bright spot today. And XBI was up 1%, 85. XBI reclaimed 85. Look at this. We were talking about XBI, and then, it's kind of playing games with us here about this trend line, but it regained that 85 we were talking about. So for now, this could be decent. But it's got some relative strength here. You can't necessarily deny that, whether you like it or not. Like, you've got some relative strength going on XBI off of these lows that we made in June. I mean, it's pretty substantial. And, it hasn't even come back below the August lows. I'm surprised. But there's XBI. So targets on XBI for me. And the sooner the better. I mean, this will be great. The sooner the better. It'll be awesome. Because I have March calls on Labu. Great. First target's up towards like $100, and then after that, 107. I mean, we get to 107, let's say before the end of the year, which sounds crazy, but it's only $15 of a move. The stock moved well over $30 from June to August, right? So it's only got to go $15 to get there, and that's not that much on a percentage basis anymore. That move from June to August is nuts on a percentage scale. To get to that 107 target that I've been looking at, for a long time now, for months, many months so far, really from like March and stuff this year, to get to that spot, we'd have to see, we don't have to go that far. And that would probably be a really juicy those contracts on Labu would be really juicy. So I'd probably take off a good chunk of those, and then we'll look to ride a few more. And maybe we get to that 120. That's a lot to ask, but I think 107 is a lot more reasonable if this market wants to turn us to the upside and actually, hold these higher lows. We shall see. But XBI, man, XBI the GOAT. It might be. It very well might be if it does hit that 107, man. If it hits that 107 before the end of this year, oh yeah. If it hits it next year, that's still pretty good. I won't complain. Labu today, not too shabby. Labu, LABD. I think you've got something going on with those 3x ETFs playing Labu and LABD. And again, you don't even have to play both. You can just play one of them, just short, right? Go short versus long. They're going to have enough leverage on you, right? So I guess unless your broker doesn't allow you to short or whatever, I guess maybe. But yeah. Well, LABD, for those who are not aware, is the 3x bearish ETF on XBI, and Labu, is the 3x bull ETF. So in a day, if XBI goes up 1%, LABD will be down 3%, and LABU will be up 3%. So that is how that kind of goes. But with that said, I'm going to wrap things up. I appreciate you guys, like always, for tuning on in. We'll do another live. We'll do a live on Friday afternoon for Power Hour to wrap up the week, see what's going on by then, and see if there's anything new to talk about in terms of positioning wise, but we shall see. Hope everyone has a great rest of your evening and a great rest of your week if I don't see you till Friday or whatever. But thanks so much for watching, guys, and I will see you in the next one. Peace out.